I think it works great for trading, just having that community, having that support. And that's one of the things I'm going to touch on today's subject. Now, again, the subject was, Dear Akil, I need help. And this was a question that I got from a trader. I looked at it yesterday. I think it came through a few days ago, but I got it on YouTube. And I did respond to the trader, but I wanted to address it with you guys as well, mainly because I know for a lot of you guys, this has been a very rough week. I did my live blog yesterday, talked about how it was a dogfight and how I was giving the market blows. Market was giving me blows. Well, today I've been on the losing end of things. I had a few good trades, but I got stopped out of a monster position that I had on. I had a monster position on the euro dollar that I was sitting on for a while. And it got stopped out for a maximum loss. So although I was doing well during the week, I always had that in the back of my mind, since that pip loss is a lot bigger than what my average trading loss is. So I'm not sure if that's going to bring me back down. It's definitely bringing our syndicate into a drawdown. Not sure if it's going to bring me into a drawdown or not. I may be around break even. I got to see how what the stats look like. But that was a big hit this morning. I started off in the stock market. I now strictly do currency. So I trade the Forex market. I always say I'm going to get back into stocks, probably options one day, but right now I just don't, with the education side of things, I just don't have the time. I have really little time to grow my personal trading the way I would like to. But I mean, I'm fine with that. I get joy doing other things. But here's the message that the trader sent to me on YouTube. My handwriting is horrible, but my printer broke, so I wrote it down. Said, "Hey Akil, I'm a big fan. I've watched countless numbers of videos and I've learned so many technical and fundamental aspects about trading, most of which has come from you. Subscribe to our YouTube channel if you're not already. I can tell fibs without even looking at them, without even drawing them in, but I still can't trade. I don't understand what it is anymore I need to do. But to be honest with you, I just get worried to enter most trades, and then at the end of the day, they work out in my favor and I'm never involved. Could you give me some advice on this?" And that's a common issue that many of you guys have. Just YouTube search Trade Empowered FX. That's our Trade Empowered website, or our Trade Empowered YouTube page, or Akil Stokes as well. But I also, if you go to the Trade Empowered FX site and scroll down to the Akil Stokes playlist, I put all of these on there as well. And somebody wrote in, "The trader needs absolute confidence. It's not for everyone." That's true. I agree with that. You have to be overly confident in yourself and in your plan, not overly confident where you think you're smarter than the markets, but you have to trust yourself truly and your trading plan. But I think we all get to a point in our trading where we think we know something and it just doesn't work out. Would you guys agree? We think we have it down, and then you're just not seeing the results that you expect it, and then that leads you to overthink things, and then you start making mistakes like this trader said, where you start seeing good opportunities, but then you're scared, you're nervous, you don't enter them, you come back the next day and you're like, "Oh man, it would have won. Oh, why didn't I get involved?" And that's tough. That's kind of that's the area that a lot of traders are stuck with. A few weeks ago, I did a Forex market preview video talking about the 3 levels of trading. Do you guys remember that? I shared with you a quote from Mark Douglas about the 3 different levels of where traders are at. There's the consistently profitable traders up here. Then there's the boomer busters, which is where most people lie. Obviously, consistently profitable, those are the ones that have made it. They're able to trade consistently, bring in consistent profits year after year after year. The boom and busters, or the lower group, are the consistent failures. Those are the ones that usually blow accounts really, really quick, and they're out of the market just as soon as they got started. And then the biggest group kind of lies in the middle. The biggest group are the boom and busters. They're the ones that they don't necessarily blow their account. They have some skills of trading. They kind of know what they're doing, but they're not good enough to be consistently profitable. And those are the guys that typically kind of break even. They trade good and then they give it back, or they give it back and then they trade a little better, and they end around break even, or they slowly blow their account. And that's what about 40 to 50% of traders are at. They're in that zone. And, one of the things that you have to realize, guys, is that there's a difference between being able to trade and being knowledgeable about trading. And it sounds like this trader, they've learned about fibs, maybe they've learned about structure, maybe they've learned about simple pattern formations. They have the knowledge, But there's a difference between being knowledgeable about those things and actually being able to put it together into a system or into a strategy that you can consistently execute day in and day out of the markets. And I think that's what this trader needs. They need to take the skills that they know. They need to develop a system or a strategy, a rules-based system, something that's testable, verifiable, and repeatable, right? Make it rules-based, 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 right? That way they don't get into any psychological trouble about overthinking and staying out, but doubling down and stuff like that. And they need to formulate a strategy that they can consistently execute in the markets. And if that strategy has an edge, right, a positive expectancy, then all they have to do is consistently execute it without making error and don't sabotage themselves. And that's the key. But there's a difference between knowing stuff and being able to do it. When I first started trading, I had every single candlestick formation memorized. I had a whole printout on the different Japanese candlesticks, morning stars, dojis, three blind men, all of that stuff. And I was very knowledgeable about what these candlestick formations looked like. But when it came to trading them in the market, I had no idea what I was doing. I can see them. I can tell people what they were, but I didn't really know how to trade them. So there is a difference. Knowledge is good, right? That's plus. That it's better to have knowledge than to not have any knowledge at all. But the next step is taking that knowledge and being able to formulate it into something that can actually make you profit. That's key. In the meantime, here's what I suggested to the trader. In the meantime, while you're going through these psychological battles, the best thing you Sorry about that. Someone called me from Mississippi. Not today. Not today. The best thing you can do in the meantime is stop the bleeding. And stop the bleeding means stop trading. Because what's going to happen if you're trading right now when you have no idea what you're doing, you have no idea if your strategy has an edge, eventually you're just going to slowly leak your account. Right? Have you guys ever been there where you're slowly trading? You're not really trading bad, but each month, each week, you're going a little bit lower, 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 your account shrinking? Yeah. So the best thing you can do is stop the bleeding. And that means for this trader, stop trading live, right? Stop trading live, put your money in a safe place, open up a demo account. If you still have that gambling urge, that need to be involved in the market, do it with a demo account. But stop trading your hard-earned money until you're at a place where you know that your money has an edge, meaning that you know you're only putting your money at risk when the probability of you returning it plus some is in your favor. And that's my advice to any of you guys that are stuck in the same place. It's just if you're trading, hopefully you're not trading live if you don't have a trading plan that is testable, verifiable, and repeatable. But if you are, just stop right now, trade a demo account. No need to waste your money, right? Continue to educate yourself or get educated. Find a system, create a system or a strategy, and wait until you've back tested, you've paper traded that strategy, and you know that you not only trust your system, your strategy, but you trust yourself as well to execute it before you ever start trading live money. Again, trading live money is the absolute last thing that we want to do. There's no rush to do it. If you're in a rush to trade live, you're in a rush to blow your account. And take it from someone that has blown plenty of accounts in the past, rushing through with hopes and dreams of turning $5,000 into $1 million really, really quick. Learn my lesson the hard way, the hard and expensive way in the market. So that's today's trading blog for you guys. Yeah, certain pairs do trade uniquely. That is true. And that's why you have to backtest. You can't assume that one thing will work on every pair. General concepts will work across markets, across time frames, across pairs. However, when you have specific strategies, say you have a momentum strategy, well, it would be foolish to trade a momentum strategy on a pair or a market that is just going sideways, because you're never going to get those opportunities. You're going to get eaten alive in the chop, right? So if you're trading a momentum strategy, you want to make sure that the pairs in your portfolios are heavily trending pairs or high volatility pairs. Or else you're wasting your strategy. But a lot of traders will do that. They'll take a single strategy and say, it'll work on anything, right? And then they'll realize, why am I losing so much money? Well, did you back test it? Is what you're doing actually profitable? Tony says back testing is a must. If you don't back test, be prepared to blow your account. It's so true. If you don't back test, how do you know that you have an edge? How do you know that you have an edge? That's like, it's no different from, I'm not a poker player, so this may not be the best analogy, but it's no different from playing a game of poker without looking at your cards. Right? Would you play it? Would you play a game of poker without looking at your cards? Would you play blind? Probably not. If you don't backtest your strategy, you're trading the markets blind. You have no idea if what you're doing actually makes a profit. You have no idea. You have no idea. It's crazy. It's crazy. So yeah, that's a very good point, Tony. A very good point. Anything else while I have you here, guys? Got some work to do. What if you wake up one day and you are white? Well, skin color is just on the outside, so I'm pretty sure I'd be the same exact person on the inside. It's not a Q&A, but if questions come through, I like to address them a little bit. Would you rather lose or never play? I'd rather never play. Rather never play, right? Why lose money? Why be in a rush to lose money, right? If that's the case, if I'm just going to throw my money away in the market, I might as well give it to a charity. I'd do something purposeful with it, right? What is your living? I'm a professional trader. Yep. FOREX trader. Yep. Currency trader. Is it beneficial to get the broker involved in helping you to trade? No. Your broker doesn't care about you at all. Your broker has no interest in you being a successful trader or not. Your broker just wants your money in their account. Your broker just wants you to take trades so they can consistently get paid by the spread. That's all your broker wants to do. Do you have a video on how you use ATR and RSI on tops? I do, not on YouTube though. That's something we discuss in our training course. I don't have a YouTube video on that now. Plus 500 last month. I made 20K. Nice. Well done. Good stuff, man. Good stuff. Good stuff. Anything in the positive is better than anything in the negative. If you are managing money for someone else, would you just trade their money the same as yours? When I used to manage money, I took a slightly different approach. The key with money management is you can't be as risky. I guess it depends on your personal risk tolerance, but you don't want to be as risky with other people's money as you would with your money. With other people's money, you want to keep that maximum drawdown very, very small because the goal is to keep their money invested with you. If you start having these big swings in your maximum drawdown, your client's probably going to remove their money because the biggest thing to a smart client isn't how much you make, it's how much you don't lose. So I'll give you an example. A smart client, they would rather, you can promise them a 100% return, right? But if it takes you a 50% drawdown to get to that 100% return, they're not going to give you the money. That means if it takes you losing half of their money in order to earn their whole money back and basically double their account, they're not going to give you their money. They would much rather have a 20% return with a maximum drawdown of 5% because that means you're still making money, but there's no risk of you losing it. And I'll tell you what, that's what the wealthy people are worried about. Wealthy people aren't worried about making money. They've made their money. That's why they're wealthy. Their biggest concern is they don't want to lose their money. That's the biggest thing. So for me personally, I do have some bigger swings in my personal equity curve. Now they're fine for me because it's my money. I'm okay taking the bigger swings because I know that I'll rebound from them. But if I were managing money again, I would have to smooth out those drawdown swings just to not have any danger of losing any clients. How to start as a rookie? Learn the basics. Start with learning the basics. We had an event, hopefully you were there. We had an event 2 days ago, Keystone, where one of our trading coaches, Charles Miles, he walked you through how to read a price chart, how to go about identifying new structure highs, outside returns, stuff like that. If you didn't see that or the recording, go to our website, www.tradeempowered.com, click the Learn to Trade tab, and there's a free video training. It's about, I think about an hour and a half long. It's called Into the Gray. I think that's an excellent starting point just to learn how the market moves and really our concept or our philosophy on how to read a price chart. There's something called the fundamental myth 2 we have on there. I saw the question, how much do I make a year? Not enough. Not enough. What percentage is considered a larger than average drawdown? If you're managing money, you don't want to go past 10, I would say. Again, personally, if your personal account, I mean, you can go up to 30 and be fine. Again, it's all about risk tolerance. If you're managing money, you probably want to stay in single digits if you can. 10 would probably be the max you want to be. Where do you find investors with 100 plus K? You do your networking. You do your networking. You find people, you talk to their friends, you ask for, I guess nowadays, I used to do everything kind of like door to door, where it's like you talk to someone and you ask for referrals and you call the referrals and they hang up in your face and they shut the door on you. Nowadays, you can probably just use the internet. You can market yourself greatly on the internet nowadays. That probably would have been a smarter way for me to go about it, but I was kind of old school. So I went to offices, I talked to people, and usually they shut me down. But I said, hey, do you have like 2 friends that may be interested? And I just kept calling until it happened. Someone said, if you made 20K, then I'm a giraffe. Cheers, man. Couldn't you get sued promising exact returns? You don't promise exact returns. Nothing is guaranteed in this market. In fact, you tell them that, hey, the risk is that you can lose everything. You can't promise exact returns because there's no way for you to know what the exact returns are going to be. You have no idea what you're going to gain quarter by quarter. You have no idea if it's going to be a profitable year, a year in drawdown. You have no idea. You can show them historical results. You can say, hey, this is what I expect. This is what I expect to get on average. But you got to tell them, hey, at the end of the day, understand that your money is at risk. There's a chance that you can lose everything. So never put in more money than what you're willing to lose. It's very important. We never promise anything. If you are going to promise, under promise, right? Under promise, over deliver. First rule of business, right? Under promise, over deliver. And you look better. Then you look better instead of looking worse. I'm not interested in Bitcoin at all. I have no interest in Bitcoin. Very volatile though, so it has some wild swings. So you gotta be careful if you're trading it. Yeah, no problem. No problem. All right, we'll start to wrap things up. Good questions, guys. We could turn into a little mini Q&A session. But yeah, Bitcoin can be very volatile, so just be alert if you're going to trade that. But I've never had any interest. Yeah, tradingpower.com, guys. So much free training over there. Check it out. And of course, if you're ever interested in any education, we do that too. You just ask me about it, shoot me a message, and I can tell you the options out there. Find a way or make one. Find a way or make one. I like this concept in life, right? No excuses. You find a way to get the goal done, right? If there's something in front of you, you make a way, right? Never back down, no failure. Remember, failure doesn't exist until you quit. So as long as you don't quit, you do not fail. I saw something about how many trading strategies do you have in my rule book. Really, in a way, endless. There are a lot of techniques I use. The way I teach trading is I teach a fundamental, not fundamental analysis, but a fundamental knowledge of how to read a price chart, how to read price action, how to read structured Fibonacci analysis. And with that knowledge, you can create endless amounts of strategies. Now, there are certain things you want to look for. You can trade advanced pattern formations. You can trade CTS, 2618, Fib inversions, DSR. There's so many ways you can do it. But it all starts with having that foundational information and knowledge about how to read a price chart. And then essentially what you can do is you can create and tweak your own strategy to meet your personality, depending on how aggressive or conservative you are. And that's something we work with our training course members. It's not just about, hey, you trade this way, these are the rules, only trade that way. No, it's about, hey, what type of person are you? Hey, Akil, I'm conservative. Okay, well, instead of doing an aggressive limit order here at the 618 inversion, let's wait for that RSI to go oversold. Let's wait for that double bottom to occur, and then we'll get involved with a more conservative entry. And that helps match the trading strategy to the trader's philosophy, which limits mistakes, which is big. I'll tell you what, and this comes from my experience, if you're ever trading something that doesn't really mesh with your way of thinking or doesn't really mesh with your belief system, it's only a matter of time before you lose faith in the system or the strategy and you start making mistakes and sabotaging your trading and eventually going broke. So you always want to make sure that everything you do on the charts is in line with you as a trader. And each of us is going to be different. And that's why, everyone may have a little different twist in how they trade. Even us traders at Trading Power. I was trained personally by Jason Stapleton. I train traders that work with us now, such as Jason Greystone and Charles Miles. We all trade the same basic concepts. However, we each go about it in a slightly different way. And it's because we're just different people. So it's pretty cool. So, all right, that's it for today, guys. I will see you, not necessarily. It could. That's called a fib failure strategy. That used to be a strategy that I traded. We don't teach it too much anymore. That is a strategy called the fib failures. I would recommend adding some filters to that, not doing every one. So I'll see you guys in the live room tomorrow or in our syndicate tomorrow. Maybe I'll do a syndicate video tonight. I haven't done my afternoon analysis yet, but I appreciate you guys joining me. I'll get this up to YouTube. As always, plan your trade your plan. If you're new to this, make sure you go over to our YouTube channels. I've got over 300 videos on my channel, so make sure you watch it. Until then, take care. You guys have a good one.